What are the biggest news stories rocking the cryptocurrency market this week? Well, in today's video, I want to discuss everything from Bitcoin to PayPal to loads of big things happening with central banks that are definitely going to affect the cryptocurrency market. Let's start this conversation by talking about Bitcoin. So it's just another day and another energy company becoming a Bitcoin miner. This time it is Japan's largest electric power company called TEPCO Power Grid. Now they're starting to mine Bitcoin using excess energy. So basically we're seeing the company turning to Bitcoin mining as a way to actually monetize that surplus power that would otherwise be wasted. TEPCO has partnered with a local semiconductor designer and developer called Triple One in order to do this. Now through this collaboration, TEPCO's subsidiary, Agile Energy X, will deploy distributed data centers throughout Japan to repurpose surplus electricity from renewable energy with semiconductors from Triple One. Now, a pilot project for this has already been set up in the Tokyo metropolitan area. In other Bitcoin miner news, US Bitcoin miner Core Scientific has declared bankruptcy in what is just the latest in a very long and brutal string of crypto bankruptcies. Many other Bitcoin miners do remain on the brink of collapse, while the Bitcoin prices remain as low as they currently are. And speaking of bankruptcies, we need to talk about Genesis. Now Genesis, in case you're not familiar, they're the world's biggest Bitcoin OTC desk, and they're a major Bitcoin lender running programs like Gemini's Earn program, and they ran into big trouble when FTX collapsed. The company has a $1 billion plus hole, and parent company, Digital Currency Group, has been struggling to try to fill that hole. Which leads me to this story that the Digital Currency Group owned Grayscale may sell 20% of the shares in the Grayscale Trust. Now, if the SEC refuses to approve their Bitcoin ETF, they've said that they're going to request to be allowed to sell 20% of the shares. Well, we don't have the full story yet. The reality is that if Grayscale does do this, then we could see over 100,000 Bitcoin coming into the markets at a time when the market is already extremely fragile. Now, this is a developing story, and I will keep you up to date on what is happening with it, but none of this is stopping people from stacking Bitcoin during this bear market, with the total amount of Bitcoin held by retail investors reaching a new all-time high right now in the bitter depths of this bear market. Also, I want your opinion on this story here down in the comment section. So Bitcoin exchange Paxful has announced that they're delisting Ethereum. Ethereum, man. And they're going basically Bitcoin only, plus stablecoins, I guess. But the reason that their CEO, Ray Youssef, stated is that Ethereum is no longer centralized, that the move to proof of stake has basically made Ethereum into digital fiat, and that Ethereum's token economy has basically been just a big old fat giant scam fest. What do you think about this decision? Curious to hear your thoughts down below in the comment section. Now let's talk about some Ethereum related news that's not that. So Metamask in particular, Ethereum's biggest wallet. PayPal is to become an on-ramp provider for the Web3 wallet. It's integrating its crypto services to make buying, selling, and holding crypto much more accessible. This means that PayPal will also join the likes of MoonPay and Transact, who are already working with Metamask as on-ramp partners to make it super easy for people to get crypto straight in their wallets. Now, if you already have ETH in your PayPal account, you can use that to fund your Metamask wallet. If you don't, no problem. Metamask users are going to be able to select their PayPal account as a payment option in order to buy ETH from within the Metamask wallet, and then it gets right to your address. No centralized exchange necessary. This is designed to make seamless purchases and transfers of Ethereum from PayPal to MetaMask, and of course bring in new users to the Web3 ecosystem. Now this feature is limited to Ethereum for the moment and should already be available to select US users. PayPal will be rolling this out across the rest of the US in the near future, so do keep an eye out for that. Now, before telling you about macro stories from the banking world, we got some doozies today, so you gotta watch this stuff. I just wanna let you know about my weekly crypto investor newsletter. It's called Wealth Mastery. It's jam-packed full of alpha on altcoins, airdrops, NFTs, DeFi, tutorials, market analysis, and much, much more. Join our 50,000 weekly readers by signing up for free using the link down below in the description. So, let's talk about the big banking news. So the Bank of International Settlements, all also known as the central bank for central banks, will allow banks to hold up to 2% of the reserves in crypto. Now, the BIS has issued its Prudential Treatment of Crypto Asset Exposure report for December 2022. In the report, they introduced this new policy, which went through a second consultation earlier this year. So it basically categorizes crypto assets into two different groups. Group one is for stablecoins, and that defines these digital assets as having basically an effective stabilization mechanism. And group two is for digital assets that, well, don't meet that criteria of group one. So essentially everything else in crypto, like Bitcoin and Ethereum and all that stuff. In the first iteration of this report, they were proposing a 1% limit on crypto reserves before finally settling on 2%. Now, that of course is due to the volatility, so we're probably only getting that 2% for quite a while now, but still a massive win, I suppose, considering that we are in the depths of a bear market right now, and they're saying, hey, central banks, feel free to add some Bitcoin to your balance sheets if you want. Although we do have to wait a bit for that rule to come into effect, as it won't hit till January 1st, 2025. Now let's talk about the big story out of Japan that has rocked the markets this week. The Bank of Japan surprised the markets by widening its yield curve control policy. Cool stuff. Now this move basically allows borrowing costs to rise, as the 10-year Japanese government bond can now move 50 basis points on either side of its 0% target. Now that's up from the previous 25 basis points. The Bank of Japan didn't cite inflation as the reason for this particular move, but instead it was particularly concerned over the functioning of its bond market. And you don't want the Japanese bond market to go to crap, because that's going to affect everything. This means, of course, infinite QE, but at the same time, they're buying back bonds, and it's now going to hopefully reinforce the credibility of the new peg that they're aiming for. Now, the news, of course, has rattled the markets, causing a sell-off in bonds, causing a sell-off in stocks around the world. No one was expecting to see this happen before the end of the year, which means that, yeah, they're getting hit, they're feeling the pressure, and they needed to do something. Now, the North American head of Forex strategy at CIBC Capital Markets explained, we would have expected this to be more of an early 2023 story as opposed to now. The news has then, of course, pushed global bond yields higher, pushed the yen higher, sent the dollar down, putting, of course, more pressure on the global bond markets, more pressure on the Federal Reserve in the lead up to its next meeting, when it has to make its next interest rate decision. What's it mean for Japan in particular? Well, they're sacrificing global markets to try to strengthen their own markets. A lot of money has been spent already trying to maintain the cap on its 10-year bond. The biggest danger to the yen is that it strengthens so much that it pushes the country back into deflation. Man, Japan just can't catch a break, can it? Holy cow. Anyway, let's talk about India's central bank, particularly its governor, who came out saying that, well, cryptocurrencies are going to cause the next financial crisis, therefore they have to be banned. Central bankers, man, it's always the same story, isn't it? Always the same tune that they're playing. Reminds me of this statement from Senator Warren the other day, that crypto is basically used for everything evil and bad in the world. It's like she hasn't even heard of banks, because they're the ones who are really doing all the bad stuff. Anyway, back to the India story. The governor was speaking at a business summit this week and explained that cryptocurrencies should be prohibited, because if you try to regulate crypto and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies. They have no underlying value. They have huge inherent risks for our macroeconomic and financial stability. Hear that, guys? Central bankers are starting to get scared of crypto. They know what's up. The key here, they don't want private cryptocurrencies, only public ones that they can control, right? And of course, the timing is uncanny, as India is currently piloting a wholesale and retail central bank digital currency, because of course they are. India plans to launch a final version of that in 2023 sometime. So they have made their stance on crypto crystal clear. The only digital currencies that the Central Bank of India wants are their own. They want to force people to use it, and they want to ban everything else that actually provides freedom for people, like Bitcoin. Remember, CBDCs are evil. Resist, buy Bitcoin. That's it. Subscribe now. See you next time.